Hey everyone, welcome to a fresh episode of Show Me the Crypto. This one was a really good conversation, our first interview of 2023, and it was appropriate. We brought DeFi Dad on the podcast and got into all sorts of depth of what this year could look like. We touched on things like what had happened since the last time he was on the pod, which was August 2021. We talked about the future of DeFi and what it could look like this year, Ethereum and its scaling solutions. We got into artificial intelligence, all sorts of ground covered in this episode. Ulf, what were your thoughts?
Yeah, I mean, you touched on basically, a good chunk of what we talked about. But what I really loved is that DeFi Dad really gets in depth and we really get into this subject matter beyond just the surface level. So I thought it was a great conversation.
I always learn something. In the previous episode we had with DeFi Dad, listening back to it, I learned something. We know you'll learn something following this one as well. Enjoy.
Show me the crypto. Show me the crypto. Show me the crypto.
In a world on the brink of disruption, two men will bring you clarity by interviewing some of the most intelligent and influential names in the blockchain world. Welcome to Show Me the Crypto with your hosts, Wade Patterson and Ulf Lonergan.
Well, hi there and welcome to Show Me the Crypto. My name is Wade Patterson.
And I'm Ulf Lonergan.
We're a couple of friends from Canada who love learning about cryptocurrencies and blockchain technology, and we're happy you're along for the ride. Whether you're a crypto virgin or you know your way around the block, we hope our interviews with some of the most intelligent and influential people in the blockchain space help deliver you with value. And on this episode, we're joined by returning guest and friend of the podcast, DeFi Dad. DeFi Dad is an educator who has been focusing full-time on Ethereum since 2018. He's also an investor with Fourth Revolution Capital and an advisor for Zapper, Protocol and The Defiant. Our first conversation with DeFi Dad, which is episode 39 of Show Me the Crypto, is our second most listened to podcast of all time. DeFi Dad, welcome back to Show Me the Crypto.
Yeah, hey guys, thank you for having me. I'm actually I would say part of the reason I was excited to talk with you too is I think you guys are just really genuine with conversations. You don't have the bullshit podcast voice that some people take on, right? You like get on and they're like, "Hey everybody, it's Show Me the Crypto. Today we're going to talk about crypto and how it can make you rich." It's
10x your investment in the next month. Yeah, exactly.
Yeah, no, but good to see you guys. Yeah, it's funny you mentioned before the podcast just that the last time we talked was August 2021. And I think crazy, you mentioned, hey, we could kind of cover what's happened since then. I was thinking, I feel like decades of craziness has happened, but it's just been a year and a half.
Oh, exactly. And to narrow that down a little bit, I mean, one of the interesting things going back to that episode is that we were talking about things like the importance of self-custody. Like we spent some time in that conversation discussing that topic. And so, yes, it's a long time to cover a year and a half of what has happened in crypto, especially when sometimes 1 month feels like a year and a half. But considering some of the more recent events and just the sense of, this has always been a theme that you've talked about is, decentralized finance, importance of self-custody. What do you make of just, we don't want to spend too much time on this, but what's happened more recently in the industry, say kind of Q4 of 2022?
During the bull run, it feels like everything can work. I remember, I fall into this trap as well. It's just, I think I'm a little more cautious to trumpet thinking that all these things are working. One of the things that really stuck out during the bull run that came, crashing to a halt in 2022 is it just felt like there were so many stable coins launching. Every stable coin suddenly worked. Every mechanism was able to hold up and to scale to, hundreds of millions, if not billions. You have the most tragic stories, of course, of like Terra with UST, but there were so many other stable coins that, were basically making minor tweaks or forking code from, popular stable coins. Like I would say Liquidity was one of the actual innovations of the bull run, as a over collateralized stable coin only backed by ETH with non-upgradable code that was like maximally decentralized. That was really interesting, but so many others failed. And gosh, I want to say that we've had this classic case of, when the tide goes out, you find out who's swimming naked, and you also find out that there are dead bodies in the water in the case of crypto. And so, yeah, we have obviously seen where there were just all sorts of poor assumptions made, poor designs in terms of certain protocols failing. So I would say the Terra UST is, again, the most epic failing of a design. Like the design actually brought it to its feet. You can speculate on, like, I guess there's thinking now that there were massive shorts trying to bring it down, but whatever. At the end of the day, that protocol actually worked the way it was supposed to. It's part of the reason, Luna and UST went to zero. But then you have like the most like tragic thing of all is the contagion that spread from centralized finance. And so, I'm starting out the conversation sort of just beating up on some of the failings of DeFi, but in truth, in 2022, what performed best was DeFi. And I'm not talking about token prices. I'm talking about protocols withstanding really intense stress tests. The market being able to contract like 90% and to be able to see, the likes of Aave and Compound and Maker and Curve and Uniswap and Balancer and so many others continue to perform regardless of, the contagion from centralized finance, market prices going down. It is proof, in my opinion, that it is a more robust, finance system that happens to be digitally native. So there's parts of this story over the last year to be proud of, but it's just like the last cycle. You assume everything works and everybody's flying high during the bull run, and then everyone's sort of brought to their knees. And it matters, who you are and how much risk you took. Depending on how much risk you took, you might have had more upside in the bull run, but then you feel that much more pain in the bear market unless you were able to somehow exit at the top of market. And then in the bear market, we also have started to see the washing out of, just lots of grifters, I think is the best term, folks that probably didn't have the conviction to continue to build in the space or just participate or invest. Many of those folks tend to, quit or run out of money or just whatever, leave because the money's no longer easy to make. And it's funny because this, in my opinion, like this is where the real success is made. If you're a builder, this is the best time to build because there's less noise. It's not fun to watch the collapse of so many different teams and projects and watch everybody's net worth, contract 95%. That's not a good part of it, but there is less noise and you are sort of left with the true believers. I mean, the fact that you guys are recording this podcast, it's that proof that like you were there at the height of the bull run, but you're still finding, really meaningful conversations to have with, leaders in the space and help people to learn about what's coming, because there's a lot that is coming. So there's so much to cover. I guess like what else do you guys want to discuss? Like I just hit on like a million different sort of topics which we can drill into.
For sure. No, I love where you started because you started with the DeFi side of things and the actual true crypto. And while there were some failings there, as you mentioned, there was also sort of like a litmus test of, a stress test that many protocols all have survived and actually done well. And unfortunately, those don't really make the headlines. Hey, like protocol survives bear market, that's not really what makes the news. But beyond some of the failings, I actually think that, that's not the huge story of 2022. If you look back, the failings of centralized finance in the world of crypto have been a far greater story, which I guess is maybe a like that in itself is not positive. But when you look at the crypto space as a whole, that could be net positive in that, at the end of the day, the driving factors behind what makes crypto is not centralized exchanges and centralized parties holding people's crypto assets. So going back to that and to Wade's point about, you talking about self-custody, there are people who lost a lot of money over the last year by holding their crypto assets in centralized exchanges and with these centralized parties. So last week, Wade and I put out an episode. It was a special episode, just us, and we were making 5 bold predictions for crypto in 2023. And I'll tie this back, but basically one of my bold predictions, I don't know if it's that bold or not, but I was saying that I believe there's going to be a big shift in 2023 with crypto users sort of losing that faith in centralized exchanges if they haven't already, but also because of the increase in sort of the improvements that are being made on the decentralized exchange side of things, so that people will start to move over to DEXs that much more to do the trading that they like to do, rather than feel that they have to do it on centralized exchanges or where they might have just been comfortable before. But I'd love to get your thoughts on, do you think that is a fair prediction? What are your thoughts on maybe how you see that playing out?
Yeah. So So I think of there's like different silos of users here, and probably the most obvious 3 silos are your average retail user, which I will say I think I still probably fall into that. Like that includes beginners to power users, but it's individuals who are bold enough to get into crypto, and it's up to them how they want to proceed. Then there are in that sort of same category the types who aren't willing to self-custody, and I have a real respect for the fact that if you can acknowledge that you're just never going to be able to manage a private key and a wallet like a Ledger or MetaMask or Grid Plus Lattice One, I get it. Like, I mean, yourself, and actually, if you've done enough research to understand how a wallet works, which is as simple as you probably could watch like a 3 or 5 minute video on setting up a ledger. If that's too intimidating to you, then it makes sense to continue to trust your keys with a centralized exchange. What sucks is that in the last year, I think FTX, having obviously committed crimes at this point, I mean, it is clear as day. Like, they said they were not, to mishandle or to basically they were not to do anything with your customer funds on FTX, and they were lending it out and investing it, putting it into political campaigns, using it as a personal piggy bank, despite everything that absolute fraud Sam Bankman-Fried says. And so that plays into your prediction that it has created so much distrust and it burned so many people. I assume millions at this point, millions of people were hurt. We're looking at over $10 billion between Celsius, FTX. I don't think of BlockFi in the same arena as those two, because I do think BlockFi, my opinion, I'm not an investor, know the team, but they seem to have, made some poor decisions. They were operationally not as excellent as they should have been. They lent more money to others than they should have, or in some cases, maybe they lent money that they shouldn't have. And they ended up, I think, becoming a victim of SBF and FTX, basically preying on them, using customer funds to extend a credit line to them, give them their ridiculous FTT token, and the rest is history. So anyways, back to the user profiles. The last one is kind of I'll call them crypto institutional investors. This could be a fund, could be, a long-term, venture capital fund, could be someone who's purely market making and trading full time. But these are folks that are handling hundreds of millions, if not billions of dollars. And those are the ones that, I think also got burned by FTX and centralized crypto finance. And that is a part of the pain that we felt in this space. Is these are smart people, just like there are smart retail users who got burned. And at the end of the day, there's those who distrusted certain DeFi protocols and then thought, hey, I'm going to use an exchange that has a Super Bowl ad and is all over the news and has really notable investors. I'd say one of them that hurt the most there was, and I have all the respect in the world for Paradigm, but you had to look at FTX, even if you were skeptical, and think, if Paradigm's in that, maybe they know something that we don't, and I say all this too, not having ever used FTX. So I've really felt a lot of empathy for others. I haven't felt I knew better than them. I was I think I could have put money into that, if I was a trader, but I'm not. So I don't trade with leverage often. And so I never would have touched FTX. And thankfully for me, I keep literally everything in DeFi, for better or worse, until I get blown up by DeFi. So anyways, very roundabout answer to the fact, I think that those users in those silos will remain in their silos, but I think there is a small sliver who probably were using both DeFi and CeFi who got burned and will now lean more heavily on DeFi. But this is kind of like a tread water moment in the crypto space. Everyone is kind of treading water until there are better times ahead. And the treading water also, it goes along with others building new and interesting applications and protocols, Ethereum and other blockchains continuing to scale, but most notably Ethereum because of the L2s that are now starting to see as much activity as Ethereum L1. So anyways, I could see it happening, but even as a DeFi dad, I'd have to say that if we were just flat for the year in terms of total users in DeFi, I still think that's a win. If the year's ugly, I don't know. I'm optimistic at all times. I was optimistic on 2022, and that didn't go very well. I'm optimistic on 2023 being a better year, thinking that how much worse can it get? Knock on wood. And so, I'm hopeful that we can maintain those users. The major sort of tailwind in our favor, though, for more DEX trading is that we now have Arbitrum, Optimism, ZK Sync 2.0, or that will be the first ZK EVM in full production on Ethereum mainnet. We've got Starknet by Starkware that will be, I think, fully live by the end of 2023. and then of course you've got Polygon, which Polygon has always been an EVM compatible sidechain, but by launching their ZK EVM, this will allow them to truly become what is defined as like a true Ethereum L2 that inherits the security of Ethereum. So you've got 5 major L2s right there. Starkware and ZK Sync being, in most rooms of developers, I think there's a consensus, like these are some of the smartest teams, some of the most long-term builders in terms of helping to scale Ethereum. So, we're very optimistic about them. And full disclosure, we're at Fourth Revolution Capital, we're invested in ZK Sync. So I probably have some bias in saying that. But yeah, like we now live in an era where you don't have to go try some random new L1 that maybe is not as secure, decentralized, or is promising really high farming yield rates. We live in a world now where you can enjoy Uniswap and all of the major sorts of protocols on an Ethereum L2 and be spending, cents per transaction. So that's the big tailwind that should help to increase the total number of users and transaction, activity on Ethereum L2s. I won't speak as much to the alternative L1s. It's not my expertise, but I remain like very open-minded to the fact that there are really talented builders who will be building on other chains. I know specifically in Web3 gaming, there's some like really talented builders like, we're not invested in these folks, but really admire the team Shrapnel, which is like a first-person shooter game that uses Web3 elements supported by Avalanche. So, I'm looking across the spectrum, and it's like Ethereum will probably host the richest, most like active Web3 DeFi sort of community, but I don't think it's the end for all other L1s. I think many of these can. Not many of them, probably just a few of them. It's pretty brutal right now. I mean, it's definitely. I'm not a token holder of alternative L1s, but like I feel empathy for them because I think that again, there's really genuine intent amongst certain folks to build new and interesting applications.
Ulf, do you realize our audience has been either watching or listening to this episode for 20 minutes?
20 minutes? No, they should probably subscribe.
Yeah, they should subscribe. And if you're watching on YouTube, make sure you comment and turn on notifications. And if you're listening to this podcast, especially if you're on Apple Podcasts, leave us a rating and a review.
We're also on Twitter, Instagram, and even TikTok. So go check out the episode description. You can find all that information below. And we have an update on the NFT, don't we?
That's right. We didn't previously mention this, but this NFT for OG supporter is a one of one. There will only be one of this kind ever minted, and we have a few surprises for the person who purchases it. The link is in the episode description.
And back to the episode.
So, and you might have just kind of answered this with some of the points you brought up, but I wanted to ask, we've had our bold predictions on our recent episode. Do you have a bold prediction? And again, you kind of just made some predictions, so perhaps it's one of those that's totally fine. But if there's anything else that you think in particular might play out over the next year, please let us know.
Yeah. Actually, I would recommend anyone check out, I think his name is Eric Wall. Do you guys know who I'm talking about?
I don't know. I don't think so, no.
Eric Wall. Let me just double check. Boy, I'm probably like misspelling his name. I mean, he's a very like respected sort of analyst, but like kind of a crypto Twitter sort of personality as well. Anyways, my point is he had some really interesting predictions, so I'm probably drawing on some of those from him. I recently read or skimmed the Masari report. One thing I have not heard or seen others talking as much about that I was recently posting about is I think that the protocols that performed well in 2022, and these are like very foundational DeFi money Legos, like Aave still is an enormous money market. Compound, I think, is doing relatively well as a money market in DeFi, and you've got Maker, of course, Uniswap. I think that these tokens that were designed, some of them were designed 4 or 5 years ago. They probably deserve a redesign. And so I could see this happening, and it actually is, obviously, with a few teams like SushiSwap. By the way, too, as I call these out, I don't hold any of these tokens currently. I will call it out if I mention a protocol where I'm holding the token. But SushiSwap and 1inch both have recently started to redesign their token. I think SushiSwap is making proposals now about it, and like 1inch already has the plan out and is probably voting on it as we speak. So like, what happens when you have a protocol that people are very dependent on and is thriving and has, let's call it like real product market fit, but the token reflected a different era. The Uni token reflected a lot of uncertainties, still does, of regulation. And so they design it to be just, a governance token, something that you could vote with. I think there are some very hard questions that token holders, founders, core teams have to answer in the bear market, which is, do we continue to operate with a pure governance token that is simply for voting on upgrades and proposals to the protocol, and knowing that there is a lot of hand waving around the value of the token? I want to compare this to Ethereum, that many years ago, there was this debate of, if Ethereum keeps accruing value, if it keeps building net new protocols, net new value, or in the case of like a wrapped Bitcoin, actually like value, moving from Bitcoin over to something that is representative of that on Ethereum, should the ETH token accrue value? And the answer was, at the time, no. I mean, I think like we all made the argument that Ethereum, that token should represent, over time, some sort of like ownership in the network, and that token should be more valuable. But again, it was a lot of hand waving. It was a lot of like talking about the future. What happens if EIP 1559 got passed? Now, ETH has a very clear value accrual. The more that you use the network, the more of the, for those that are newer to this, every transaction has, it's called a base fee and a tip. All you need to do is think about, when I transact, I have to pay some sort of fee in ETH, whether I'm on, L1 or even an L2. And so the more of us using it, the more transactions, the more fees. And the base fee actually gets burned. So because the base fee gets burned, the more usage, the more ETH you're technically destroying. And so the supply shrinks. And so that means if you're holding ETH, you're holding something that has a more and more scarce supply. So a lot was done to update, I think, the tokenomics that, were originally implemented for Ethereum. So I can't imagine why that wouldn't happen with other protocols that are thriving, on Ethereum, that have these pure governance tokens. I want to say, I'm not an expert in comp, but I want to say comp is purely just for voting. So there's a good example. Aave has some updated tokenomics, but even theirs, I kind of expect there to be an upgrade. We know that with synthetics, Kane Warwick has openly said this, in interviews, that he thinks that they have a lot of, I think he called it debt, is the way, like not almost like technical debt, saying that, they had lots of ideas they built into this token, and they've grown up. There's a lot that has been shipped over the years, after lots of promises were made. And so that token probably deserves some sort of redesign. And then I guess I'll leave it at this. Like, obviously, as I say all this, I'm ignoring the elephant in the room. That is, if you have a token that clearly accrues value, part of the reason I think a lot of teams, didn't build tokens to accrue value, like you have like the GMX token, which very clearly accrues value, built by an anonymous team. The anonymous nature of the team has been like an advantage to them, because even though I'm sure there's some worries about how regulators might, react to their token design, or they're anonymous. So there's like something there at least that allows them to act while there's a lot of uncertainty, and we're all waiting for this like regulatory clarity, especially in the US. So that's it. If you're a founder, do you risk not upgrading and redesigning your token and leaving it in this sort of hand wavy space as just a governance token, where the token then has to be sort of debated as to why it accrues value? Or do you just make it clear? And my fear is that there will be great projects, great teams whose token or project fails because they decided we'd rather just not redesign. We'd rather not take any sort of risk of this token being deemed a security in the future. So it's a very tough place to be in. It's like, do you let a project die, or do you take that risk? And again, I sit in a seat of privilege with this, because I think as an investor, there is risk that I'm taking still there. It could go to zero and, could face repercussions with a token that gets deemed a security. But it just doesn't make a whole lot of sense to me to let a project die. So I think that Uniswap is one good example who is like testing the waters. They've got a really strong legal team. I think they're probably at the forefront of every conversation right now with regulators, and especially the lobbying groups. Like, I don't know if that's the right way to frame them, but I'm referring to like a Coin Center Blockchain Association. I think that they are obviously testing the waters with turning on a fee that accrues then value to Uni token holders, because it would make a lot of sense. We're in a less optimal market, and normally in a bear market, you see, dividends paid out to investors. And so it would make sense now for token holders who are remaining very loyal, by holding tokens that are down 90, 95%. It would make sense for them to be able to accrue a fee. So yeah, it's going to be really exciting to me if this happens. Sushi's doing it 1inch. Uni has started to play with that. If we have any sort of mega success stories with this, I think you'll see a domino effect you'll see lots of new tokens rolling out. And actually, I without disclosing anything that's confidential, I'm aware of a lot of teams that are already, they're like, they've got someone full-time thinking about how to redesign that token. So those OG DeFi tokens, early stage projects, I don't know anything about Maker, but like that sort of class of token, I wouldn't be surprised if we see some like updates. And if you see a renewed interest then in those DeFi tokens, maybe it's self-serving to me as a DeFi dad to want to see that.
DeFi Summer 2023?
That's probably the one thing I haven't seen talked about as much, as opposed to like L2s will become more dominant as like a default, blockchain, or let's call it settlement layer. That will be the choice of most users, of course, because L1 is expensive still, even when the market's down and there's less congestion on chain. I am waiting for there to be a recognition of just how absurd the ETH inflation rate is right now. Like the fact that it's like 0.0, I got to double check on ultrasound.money, but it's like 0.001 something percent, 0.013% per, and this is based on the merge happening 111 days ago. This is because so much ETH is being burned and we're in a bear market. Like, this is absolutely going to go negative in the next, bull run, whenever that thankfully happens. So the issuance or inflation rate of ETH is 0.013% per year as we're talking. Bitcoin is 1.716%, which has always sort of been like, I think like the benchmark for the crypto industry. It's been a part of like the narrative around Bitcoin and why it's valuable with a finite supply. And then ETH would have been 3.589% if we stayed with proof of work. So yeah, ETH has become, I think ETH could actually flip in the market cap of Bitcoin in 2023. I think it would catch a lot of people off guard because during a bear market, it's been normal to see Bitcoin just outperform everything else, but so much has changed. ETH is now, actually ETH being green is important to, I know, crypto institutional investors. The fact that the carbon footprint of the Ethereum network is like 99% down. I'm not here to like advocate that should make it valuable, but I'm just repeating what clearly like other investors have talked about, and the fact that like their investors, this is actually one multi-billion-dollar fund had just disclosed that, they have investors who they would love to invest in Bitcoin, but it's the carbon footprint there that it's not a good narrative for them to get on board with. So, which was shocking to me to hear that. I guess I'm not in those rooms with folks who are investing many, many billions. And so to hear that, I think it was to me, sort of an inflection point, realizing like, wow, like, that's how far ETH has come as a store of value, and the Ethereum network itself has come to be, recognized as a legitimate, blockchain, like if not the most legitimate blockchain. And so, yeah, I think actually to go with that too, I think that ETH could be the asset that leads the market. We tend to have seen Bitcoin do that in bear markets, and ETH and Bitcoin compete for that in previous bull runs until this last bull run. This one, it seemed that ETH was leading the market after May 2021, especially. So yeah, it's a very promising time for Ethereum. Fundamentally, it seems that the token itself now is recognized as a very premier store of value. I think that I do think we're always like one pump away from, Bitcoin seeing better times ahead. And then, of course, that's always good for the rest of crypto. From a purely price perspective, people see Bitcoin go up, and it's still a more recognizable name on the news. And when you see that in the mainstream media, I have no doubt, especially if we're in a recession now, in the US at least. If you see something like that going up, I think we tend to underestimate like the reflexivity of the markets and people jumping on board with that trade, wanting to get on board with crypto suddenly when like maybe they had discarded it because crypto was down so much. But now like stocks are down, there's plenty of stocks that are down 50 to 90%. So people are feeling a lot of pain and a lot of fear. And I'm not counting on crypto becoming decoupled from that market. Like it tends to trade in sync with like tech stocks or growth stocks. But there's always a hope and a prayer there. So anyways, main takeaway is you stay patient. You have to just continue to, I think as an individual, you have to continue to find like a joy and value in what this space is building. And, with with the likes of like the original use case of Bitcoin, that obviously drew so many of us in. And then you see this flourishing of like a new digital finance economy through Ethereum, plus all the other use cases, which, you know, we haven't even mentioned like NFTs here. That is still going to be an enormous draw because it's just simple, easy, and fun. You know, like I'm not advocating people try to flip NFTs. I'm saying that people like to own things. And if you can own something that is, you know, like a digital trading card or whatever, the fact that you can trade that on OpenSea or sell it the way that you would have sold it on Amazon or eBay, that still is a really radical concept. So anyways, I'm just hopping around between lots of topics.
I love
what
it.
other bold predictions do you guys have?
Well, okay. So I was going to say, I love that because you had a few packed in, but what will beat any of our bold predictions, it was the one you said about the flippening. Like that would be absolutely nuts if that happened. That's the boldest prediction so far. So ours were, the first one was, what was it again? So there's a few. One was that this could be the year of music NFTs. So from like an NFT perspective, that music NFTs could pop off. One, which is very obvious, was that centralized exchanges are going to have a lot more responsibility in terms of, you know, proof of reserves, that type of thing. That seemed like something that would be clear. One was that this is probably the best year of all time to get into crypto, or those who are kind of sticking around the bear market. I just saw, you know, Ulf and I, we got into the space in 2016, 2017-ish. And we paid attention to what was happening during the bear market, but that's one of my regrets is that I wasn't more involved in it, because you see all these people who were very involved. Yourself, you're a great example of that. And they really, that paid off, right? It's that reputational gain of being in the space and everything you learn as well. And then come the bull run, you've already kind of got those relationships built and everything like that. So that was one of the things, is that, you know, if you can land a job right now, or it doesn't have to be a job, just, you know, stay educated, anything like that. But with the job specifically, one, it's probably a great sign if there's a company in the blockchain space hiring right now, that they're like longevity wise, they're going to be around. And to get that kind of experience now, come the bull run, a lot of people are going to be looking to come into the industry, whereas you can kind of be maybe not ground floor, but closer to that. And then I can't remember what the first, the first one. Yeah. Well, there was one as well on just that Ulf and I disagreed on this. I said that it's going to be like a really tough year. Like I figure 2023 is going to be like a cold bear market winter. There could be some pop-ups with volatility, but where we drew the line, and not financial advice, of course, but we had a little friendly bet on, we threw out the number $29,000 Bitcoin, the over under. Ulf thinks it'll be over that by December 31st, 2023. And I say under. So we're kind of different on which, using Bitcoin as in the past, it's kind of been a leader in the market. But to your point, that is kind of switching with Ethereum. So what are your thoughts on some of those predictions?
Oh man. Yeah. I heard someone else just say something like $30,000 Bitcoin too. So instead of a prediction of the price, I'll say, I mean, you guys have seen this same way since 2016. Everyone's always wrong. It's just like we're all wrong. Everyone's wrong. The issue is that we've all seen these cycles play out. So I just like wonder like what else could happen that's unexpected. And so like some examples of this in the bull run were, I think everyone expected this insane blow off the top. And you could argue that ETH and some of the all these other like altcoins, you know, even Luna at the time before its collapse, these tokens were up, you know, 40x, some of them 100x or more. I think Sol was up like 200x at one point. And so maybe that was the blow off the top that like no one's acknowledging, like that it's like, how did we not say that this was a blow off the top? No, in November 2021, one of the the goofiest things that did repeat, and this was there's someone on Twitter who I think posts really level-headed, like, good sorts of insights to keep you thinking long-term about crypto. His name is Pentoshi, and I think he's the one who pointed out Coinbase was the number one app again on the App Store. And that was what happened, I believe, in December, January 2017, 2018 to end that bull run. And so 2022 actually looked a lot like 2018. It was just this brutal drawdown. But what changed is that we had that much more like venture capital money that had come into the space. So there are a lot of teams who hold a treasury of their own token, but they had actually raised funds. They had raised in stable coins, 10, 20 million, who knows. And so that I do think was sort of, one example of how the industry grew up a bit, realizing like, I can't hold a treasury of just our own token. Even though some of the flagship teams in our space, like Uniswap, did hold a treasury of, I think, mostly their own token. And so, yeah, I'm like wondering, after 2022, with all the new issues we ran into, the contagion, that started with UST and Luna and just bled into everything else, it seems clear now that the BTC trade, wrecked a lot of folks, including Three Arrows Capital, aside from all the crimes that those guys committed. And then you've got, FTX obviously collapsing from mishandling customer funds and committing every financial fraud known to man. And so, yeah, I mean, it was a rough year. It was like a year where I think it was arguably worse than 2018, even though for me personally, because I was fortunate to not be in Luna, to not be using CeFi lenders like BlockFi or Celsius, to not have ever used FTX, like, relatively speaking, I feel very, very like fortunate, but it was just brutal to watch. And it was brutal because really smart people got hurt in the space. There are a lot of really savvy folks who got hurt, especially I want to say FTX was like the cherry on top. And like that really wrecked people who just never in their wildest dreams imagined it could be as bad as what it was, where they were truly mishandling those funds, and then it could like unwind and collapse that quickly. Like, I'll say, like, looking back, I always thought that FTT token just had the most outrageous price action. It held up in any sort of market conditions. Everything would be going down. And part of the reason I feel for others on this is I thought a million times about buying it. It was a token where I thought, yeah, FTX is legitimate. This was in the early days of watching them. They're growing like crazy. And whether the team says it or not, that token clearly represents, their success. And so, that obviously is why it's I think they're being charged with the fact that it was an unregistered security. Like, I mean, it checks off all the boxes, but those tokens, you expected to do well, and everything just got so ugly. So for me, okay, to bring it back to like, what does this year look like? I think it's actually more likely than not that 2023 will look like a 2019. It's very likely though that it will be, how do I want to say this? Maybe less volatile is the way to think about it. Or I know that there's less uncertainty. In 2018, 2019, there was real fear. I was at Consensus at the time working with like different Ethereum teams. And like, you had a real fear that like this whole industry might not survive. Like this, even those of us who had like the most strong conviction about our future, if you had an honest moment with yourself, you were like, there's actually a chance greater than 1% that this does not work. That's not the case anymore. on a weekly basis, I still can write a tutorial in the Defiant. It's every single week. I still am seeing new products being launched. The products, though, are just a little more boring now, which is, they're ideal for a bear market. So like the Index Co-op just released an index that tracks, it's basically a basket of liquid staked ETH. That is not something that would have been as exciting during the bull run because it doesn't have all of the elements of leverage and high APYs that people want to see. But that's all changed. Now they're stoked to be able to make 5% annually in terms of, liquid staked ETH. So a lot has changed. And I think the key here is, although I'll put a cap on it with saying I am optimistic about 2023 because I know all the protocols that are coming, whether it's DeFi or whether it's, I've really been diving deep into Web3 gaming. I don't have, clearly, if anyone hears me talk about it, I sound like a LARP when I talk about gaming. I'm not a gaming expert, but what I do get is the hard part of creating a world-class game that people love to play. There's no way that it can't benefit from some Web3 elements. Just let's assume you have a Fortnite, but at one point or another, you earn some sort of recognition being one of the best players on the planet. And maybe you have an NFT that recognizes you as that. So maybe you have something like a Fortnite that, allows you to earn an NFT that now is yours to prove clout, that you're one of the best players on the planet. I've heard this over and over again. I've heard founders and individuals say they're a top 100 player in whatever game. And it's been hard to verify that. It's pretty difficult without, I think, something like an NFT, which, at least could be, recognizable and provable on chain. So anyways, throw it all out. I'll give a real life example. I'm playing this game EV.io, which actually uses, it allows you to buy skins, weapons, and what's the third one? Anyways, they have 3 different types of NFTs. You don't have to own them. If you go to ev.io, you can just click play. You probably want you don't need to have the most powerful computer, but it's it's like a battle royale type game, first person shooter. You're just, it's a lot like Halo. And it's so fun. I probably play it 30 minutes to an hour a day. And I kept playing it, and I kept seeing that it said you earned 0. And I was I should create an account because I am playing it. I have no expectation I'm probably ever going to make enough of their e-token, but I've been playing it because I enjoy it, and the frictionlessness of being able to go to my browser, open it up, and play it is fun. That to me has been one of the best examples of create a fun game, let people play it under the expectations that they would normally have in playing any other game, but then kind of slowly feed them reminders hey, if you log in, you can earn e-token. BT dubs, you can earn, I think it's 1.5x or something more tokens if I held one of the NFTs, which, by the way, when I play the game, I have a really boring avatar, and I notice the others have these really cool looking souped up avatars, which I also thought, who gives a shit about that? I'm a father in their 30s, playing this game against probably a bunch of 12-year-olds. And I'm looking at it and I'm going, I get it. It is cool. It's I genuinely love playing the game. So that's why 2023 could have some really exciting moments where a game like that becomes more mainstream. There's that many more people playing it, and maybe it leads that many more people into the space. I think the next bull run will probably have some sort of crazy mania around certain games where people are playing and they're earning outrageous amounts of money. It'll be very short and fleeting when it happens. I would be very careful, because like it'll be a token that you earn and people cash out, and the token price will like keep going down. It'll be, like I said, it'll happen over a very short period. But again, these sorts of bubbles in terms of behavior tend to lead to people discovering new products that they want to stick with. I'm not earning the crazy APY that I once was on an Aave or a Curve or Convex, but I love using them, and I am earning yield there. I'm satisfied with what I think is an ample amount of yield, and I think that experience will play into probably the Web3 gaming space. And then there's all sorts of other use cases. We could talk a bit about like the fact that AI is clearly having its moment with like subscription-based software. People are realizing
This is one DeFi Dad, just sorry to cut you off there, but that I wanted to jump into, because I think we're exploring a lot of the themes that 2023 could look like. But one of the big things that we've seen in the last month or two is this kind of, like, at least in the mainstream point of view, usage of AI, and, whether it's Lensa, whether it's Chat GPT. And so, this is something that I thought would be fun. I took your Twitter bio, or one of the bios from your website, and I plugged that into Chat GPT, and I asked it to give me a good podcast question to ask you based on those types of things. And
that is so cool.
Here's the question from Chat GPT. As an educator, what are some of the common misconceptions you encounter when teaching others about DeFi and Web3? So in your answer, you can answer that directly, but also just like maybe speak to the fact that artificial intelligence comes up with as good a podcast question as we could on our own, type thing, which is pretty mind-blowing.
Yeah. So I have actually been using Chat GPT for really simple things, like really exactly what you just did. I haven't thought to do that. That's such a cool idea. I'm going to definitely copy that. I've been using it to refine tweet copy, which I normally I'm not overthinking the things that I tweet out, I think. But I recently just recognized that sometimes I run out of new ideas or better ways to phrase things. And so I'll punch it and say, can you make this post better? Can you improve the language? It is mind-blowing what it's capable of doing. And so I actually, shortly after sort of seeing how that was working, I was already using the text-to-image applications that are powered by Stability.ai's Stable Diffusion, which, by the way, we invested in the seed round of that through Fourth Revolution Capital. So that I just want to call that out in case I have any bias in talking about it. But that those applications got me really excited. And then I want to say I hit a point in the arc of my excitement where I just realized there's a lot that I value in my skill set. Clearly others value in my skill set, where I was like, this is all going to go away. Like, it doesn't matter that I can come up with good questions on a podcast. Like, you can just punch it in. I've always thought that, like, I'm not the world's greatest writer, but at least like I'm semi-decent. I'm like, what do you need me for? If you can just punch in like a prompt into Jasper.ai is a really popular writing tool powered by AI. I recently played with this tool called Runway ML, which is like Final Cut Pro on steroids. It's actually, Final Cut Pro is probably still an Adobe, probably still have better tools, but the AI powered tools are mind blowing. Like, you can like basically remove a light post in a any sort of video scene, or I could take like the two of you and I could remove Ulf like from the frame, just basically just cover you with like the little tool and make it look like you were never there. It's so where this plays into Web3 and DeFi. I've got one really recent example. There's a team where we are advisors to them through Fourth Revolution Capital. Just be aware of that. Neoswap.ai, they are kind of like a DEX aggregator, but it's for NFTs. The idea is that if the three of us plus, let's pretend like, I don't know, 20 or 100 others organize an NFT swap party, we could show up and we could punch in like, here's the NFT I have. I'm willing to sell these few NFTs. Here's the reserve price. And then you can look at the other NFTs and put in like max bid prices. And you can put in even preferences like, if I can't sell mine, I don't want to buy like another, or I'm still willing to sell mine and just get tokens. It basically is like an order book, DEX aggregator / like power tool that is powered by AI. And so my point is there used to be, just your standard sort of DEX aggregator, which has certain algorithms that power it. Plus, there's the design of having market makers and traders participating. And, it's a lot of game theory. But what happens when you can improve all of that, like 100-fold, 1,000-fold, by using artificial intelligence, which, by the way, is, we all know it's just getting started, but like eventually we know all of this is going to like surpass the limits of our own intelligence. So I have some fears about, the fact that, like, are we just going to see a bunch of AIs trading on the market eventually? I think it's a matter of time before there will probably be a DeFi market maker that is powered by AI. Right now we talk about an automated market maker that is like Uniswap or Balancer or Curve, but there's no way that these tools are going to compete with something that is, empowered, I think, by AI resources. So I'd say, going back to NeoSwap, it's one of the first like good examples of like, again, let's call it a DEX aggregator on steroids for NFTs. And it's right now it's only becoming smarter every day because of all of the data that it can learn from by having these swap parties. And, I think eventually the goal will be for anyone to be able to just plug into it the way that you use like a 1-inch and say, hey, I've got this one NFT and here's what I want to sell it for. And it should be able to like match, hundreds, thousands, millions of different preferences and needs and wants and bids and so on. So yeah, just everything in DeFi probably gets replaced. All the different like algorithms eventually get replaced by AI. A lot of the work that is valued as like, I want to say manual work done by a human probably gets replaced. All the due diligence with, I'll give an example, Maple Finance, which is a token that I hold. Maple does under collateralized lending. They've managed to, I think they've averaged still about 2% as a default risk, having originated almost $2 billion in loan value. That is impressive, but why not get that to zero if you've got an AI that can, help you to do due diligence on borrowers, keep track of everything on chain in real time. I think that some of the borrowers who got blown up on Maple, who basically defaulted on their loans or were likely to, an AI monitoring tool one day will probably catch that and say, hey, you do not extend an additional loan to these people. Like, we can see this, this, and this. We'll probably see, on a more positive note too, we'll probably see less hacks and exploits. I think that real-time monitoring tools powered by AI are going to help DeFi in the future to avoid like, some of the like repeat types of hacks that we've seen. Might even like act as a tool for individuals, not just the core team who wants to monitor the code and prevent a hack from happening. I think it's very likely it'll be probably like malware bytes, if you've ever used that. Like, probably have something that sits in your wallet and warns you that, hey, before you deposit, this code is upgradable by a single signature, or this code is upgradable by a multi-sig with only 2 signatures. This code is upgradable by 3 signatures, 3 of which are owned, we believe, by the same person. Like, as you know, the sky's the limit in terms of what can be improved there. So those, anyways, I'll finish that off with, there's all these benefits we're excited for. But I will say, as like, you know, as a father and, you know, human being, I mean, I am concerned about us. I'm concerned about the generations like yet to come. You know, I think that, you know, there are just lots of jobs that will be totally replaced. You know, there are people who derive a lot of joy working in customer support, even though others probably find it miserable. Those sorts of jobs are just going to be replaced. And, you know, what's really odd, actually, of all of this is, I think there was always the assumption that AI was going to come for blue-collar jobs, well, however you think about that, manual labor jobs. McDonald's is going to be all automated. It'll be all robots. I think the complete opposite is clearly happening right now. We're seeing these we're seeing these very creative jobs, like jobs that have like really, they have skill sets that are difficult to master and acquire over a lifetime. And I think a lot of them are replaced. Like, honestly, I think about like the investing side of this. I mean, no matter what anyone tells you, I'll probably be kicked out of the investor Illuminati group. Kidding, I'm totally kidding. But if you look at the performance of basically all investors and funds over time, I mean, I think it proves without a shadow of a doubt that there are very few who truly have some sort of edge and are able to outperform the market and their peers over time. Most are riding the wave when things are good, and they're, you know, treading water when things are bad. And so I just like wonder what will happen. Like, we've already seen, I've been really excited to see that there's DAOs that have arisen who can now, you know, compete with VCs. Like, I want that. That's the world I want to live in, where anybody can participate. And, you know, there's less barriers to entry to be able to be able to get into that world of investing in early stage startups, whether it's DeFi, Web3, whatever. But there's also I mean, there's so many jobs here that like look like they could be automated away, when I thought marketing, writing, creative types of things, that'll never be replaced. You know, that'll be, you know, generations from now. That stuff looks like that could be automated in the near future. And then the question is, like, will people then value human sourced work more than AI sourced work? I mean, from an efficiency standpoint, I think the AI clearly wins. But I guess, yeah, I mean, you can see I'm stumped by it. I've spent weeks at a time where it concerns me to the point where, you know, I can't say I haven't been like depressed about it. I view all of this, the explosion of new AI tools and how that's going to fit into Web3 and DeFi. It reminds me of, like, you know, as Excel and the internet and email became really, you know, more mainstream. It's a huge opportunity for, you know, for everyone to get on board with. It's an efficiency sort of hack, but again, like, this is different this time, because this stuff, the more and more refined it gets, the more likely it is that it will replace, you know, human efforts. So I'm not hearing as many talk about this, but I'm very curious how this plays out in the DeFi space, especially in the coming years. I think in the short term, we'll see these humongous improvements from AI-powered DeFi and Web3. There's also like some really like nice, warm and fuzzy use cases. Like I do think like we're probably less than 10 years away from seeing, let's say, an intelligent NFT that, you know, basically emulates or acts like and is like a model of like a real human being. You know, like maybe you can bring a relative who passed away at an early age and, you know, someone can have some very fulfilling conversations or something like that. Or someone loses a spouse and they want to like bring them back to life through AI. Like there's all sorts of interesting use cases there that, you know, sound like an episode of Black Mirror, but like really could be, you know, they really could provide improvements, you know, to our lives. So anyways, my focus, I'll say this, the focus on AI and Web3 is any sort of, you know, algorithm or engine under the hood that can be improved, refined, you know, 100x, like that short term is where my focus is. And I think that'll play out in a game. Like you'll probably be playing more competitively against, you know, AI powered, you know, let's say avatars in EV.io. Like that to me is like, that's just fun. Like that's a cool use case. But you've got the NeoSwap type of thing. You've got other like traditional DEX aggregators. I think market makers for sure. Like we know by now, like the market making business, it is not my expertise, but like they seem to not do a very good job in crypto. A lot of them are very bad at their job, and many of them ultimately seem to get blown up over time. So I think it's very likely that an AI that has no emotions is likely to, you know, with infinite knowledge, is probably going to outperform traditional market makers. So anyways, that's my ramble about AI and Web3.
It's great, DeFi Dad. We've covered a lot of ground in this interview. I think it's going to be a great episode just for those wondering what this year could look like. I think there's a lot of things touched on. As you know, if you remember from August 2021, we like to end every episode of Show Me the Crypto with 3 rapid fire questions. It's a segment called You Had Me at Crypto. Ulf's going to ask you those, so you're not off the hook. We went back and dug up your answers from August 2021, so we'll see if you get some new ones here. Ulf, over to you.
All right, so I'm going to ask the question. We'll see what you respond with, and I will then remind you of what you answered with before, all right?
Oh, very interesting. Yeah, love it. Yeah.
Okay, so first question. Who's your favorite person to follow in the crypto space?
Oh, wow. That's a hard one. Okay, to refine that question, do you mean like someone who I like learn from more, or could it just be
totally up to you for interpretation? Totally up to you for interpretation.
You know what? This is easy then. First name that popped into my head, and it's just because he's a good person, and I think he like is just such a good representative of our space, is Leighton Cusack from Pull Together. I don't know what it is. I've known him since 2019 when he was building Pull Together out of a van. That guy has never changed. He is just the same good-hearted person, and a lot of people change during bull runs and bear markets, and he is just a really good person. He's someone I definitely kind of like look up to. So yeah, awesome. Leighton, number 1.
Cool. And previously you had said Anthony Sassino.
That's funny. I still, you know what? I love what Anthony does in terms of he's very gritty with his commitment to putting out content. I think Anthony knows this. He's a little more confrontational than I am not. I'm the opposite of that. It's funny. I couldn't have chosen like more opposites, even though like I think we're all on the same team there. Anthony versus like a
Two good answers though.
You should clip this for sure and show that's yeah. Anthony's fantastic. You should. The Daily Gwei puts out really hard hitting like knowledge to learn about Ethereum, but Leighton's he's my favorite.
And we've got interviews with the both of them, so go check them out as well.
That's great. Yeah. Oh, that's fantastic.
All right. Second question. What will the price of Bitcoin be 10 years from now?
Oh, man.
Not financial advice.
Yeah. And this is, exactly. This is a fun one.
Yeah. Oh, yeah. We're going a decade out.
It's hard to imagine. Like, I really do think Bitcoin will be at 1 million, even though, like, full disclosure, I'm always long Bitcoin, but my portfolio is a very, very small fraction, like less than 10% Bitcoin. And I'm like probably 70, 80, 90% long ETH at all times. So I think I hold on to what little Bitcoin I have to as like, it's like an emotional thing. Like I don't want to sell the tiny bit that I have. So I think it will be 1 million. Actually, I know it sounds nuts. Now it'll probably, pull down, it'll go to 1 million and God knows it'll fall back to 100,000 or 250,000. But they have a cult there that draws people in. So that's it. I'm not betting against the cult there, but yeah, they've got a cult for sure that keeps drawing new folks in. So,
and let's get your ETH prediction as well for 10 years out, because you did both last time.
Yeah. So, boy, 10 years out. I think, okay, I can say like, obviously in the next milestone, psychologically, everyone's looking at 10,000. That's going to be a big one to overcome. Probably over, I keep it really simple. Like it's like that bell curve meme, like you're on the left side of it and you're like, Bitcoin's going to 1 million. And then in the middle, they're like, yeah, but like they've got 1 million reasons like why it could or couldn't. And then on the right, they're like Bitcoin as like a Jedi in the space. You're like, Bitcoin's going to 1 million. I actually do think it's funny. There's probably another 2 cycles at least in 10 years. So it's possible that it goes to 100,000 in that time. I just like, again, I'm trying to like give like a realistic idea of like where that ends up. I probably too should be like gauging that off of the total market cap. So actually to whatever the price is when I think ETH is going to have a market cap of like 10 to 20 trillion in our lifetime. And that's just because that's how big that is. It reminds me of every other sort of open network that benefits from the virality of just people continually building new applications on it. But I would recommend that anyone not make investments based on those numbers. So yeah, I'd say 100,000 for ETH and I'd say 1 million for Bitcoin.
All right. Well, your answers were pretty much on point with what you said before.
Excellent.
Yeah, you had
Consistent.
previously predicted ETH to be over 100,000, and Bitcoin you said 500,000 or 1 million. So yeah, pretty
Which is
consistent.
a pretty big gap, to be fair. But
Yeah,
That's yeah. It's funny after this to if you go back to that a moment, after this bear market where you recognize that as like an ETH or Bitcoin goes up over time, your unit of bias is working against you, and because like it's just a big number, and even though these tokens are divisible, to like teeny tiny amounts, people just like we see this play out every cycle. People want to buy tokens that are like less than a cent and own 10,000 of them versus having like 1 ETH or 1 Bitcoin, even if the ETH or Bitcoin outperform it. So, yeah, I like that answer that I gave on the Bitcoin because I think ETH has enough momentum in it because there's just so much built on top of it. I tell like my friends and family, like Ethereum, even though it's decentralized and blah, 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 all the buzzwords. I was like, think of it kind of like Microsoft. It's just a platform that has so many different product lines that are being built on it. And so it's this behemoth of, in terms of its growth. Bitcoin just does, this one thing, I would say not that well anymore, but it whatever, it's got a cult behind it. So, yeah, I don't know. Bitcoin only, it's impressive the growth that Bitcoin's had over time. I don't know if Bitcoin can it go like 3x from 60,000 or 70,000, puts it up around 200 and some odd thousand. Yeah, I like that 500,000 I gave as a more conservative number, but I feel more strongly about Ethereum just because there's too much being built on it. There's too many L2s and eventually there will be L3s, and there's a very robust roadmap that's been updated there. I'd recommend watching an interview with Vitalik, and you can learn a lot about how him and other leading researchers see it playing out. But guys, this is anything else you wanted to talk about? This
well, I got one last question.
Yeah.
So the last question is, what is the most underrated project in crypto?
Oh man, that's tough. I'm going to say something that I am not invested in as a commitment to being an objective curator and not a shill. Boy, underrated. Man.
And you could be general. If you don't want to name a specific project, you could get more general in maybe areas or developments that are underrated, things like that.
I know. So I'm going to stick to something DeFi too. Let's avoid the Web3. Gaming is so new right now that we're in that phase where it's like you're investing in DeFi in 2018 and nothing's really live and working, and you just don't know. And everyone's optimistic. So it's likely that who knows, 95% of it's going to end up not working out. It's hard that trading remains this use case that it's just hard to beat it. At the end of the day, people want to hold stuff and they want to be able to instantly swap it. And see the things. Okay, so a Uniswap, I don't think is underappreciated. I can't believe it's kept a market cap of 5 billion. So I'm very happy for them. I feel like they deserve to be where they're at. And then I do have a long-term position as just having market bought it with Nexus Mutual still. I just, insurance is such a frustrating space to be in because basically every time there's a hack, you have everybody screaming at you, why didn't you offer more cover for everyone else? Which in reality, a lot of people just don't buy insurance. And then you have demands to immediately pay out, which even though Nexus has paid out more than anyone, something I think we've paid out $5 or $6 million in claims. It's just not a happy business to be in. So they suffer from being underrated. You know what? I'll say, final answer is Pull Together, actually. This goes back to Leighton. Pull Together is such a fun game because it properly should be called a no-loss savings game because we're saving money and then the money is pooled and earned interest and it's randomly awarded to someone. The design of the game, it's so refined. The user experience, the UI itself is so pretty. They've always been leaders in this, but Pull Together has suffered from not being speculative enough, not being degenerate enough. And so I want to say that Pull Together, I really want to see them have this moment where if they could get a pot of money like $1 billion, they would be earning such enormous prizes that I think it would draw mainstream attention. And what kills me is the government, at least in the US for sure, has, all these government run, lotteries, and it's all gambling. It's all about put your money in and lose it. And the government takes a huge portion of it. And then you have this thing where you don't lose your money. You put it in, it earns interest. It serves a real purpose too, as like a lender in the market. I think one day if Pull Together has like $1 billion in it, earning interest for prizes, I will definitely like look back and say like no one ever gave them enough credit, or they had their moments in the spotlight right when they started, but and they've had moments along the way injected with excitement because of new products they've put out. But yeah, they have been so careful to stick to what they do and to not give in to the temptation to create a more degenerate sort of product that risks more money. They're basically, Leighton and his team are the complete opposite, the community itself, complete opposite of like an SBF and FTX. They have just like, they're just honest, they're transparent, they build what serves a greater purpose in the community. And also they're amazing product builders. So, I really want to see Pull Together like I want to see it blow up to hundreds of millions, if not $1 billion again. So
that's an awesome answer.
What did I say last time?
Yeah. So just for context, the last one you said a layer 2 solution that hasn't gone live yet.
Oh yeah. Oh, that was a good one. Yeah.
You had some good answers back then in August 2021.
Yeah, I think that made sense because we were just starting to see, I think Optimism was just like playing with like a few different applications at the time. Yeah, that's I love that you guys pulled those old answers. It's interesting. Yours aged better than some consistency.
Yours aged better than a lot of the ones we've seen. So well done on that. DeFi Dad, this has been an awesome conversation. As I mentioned before, I think it's the perfect start to a new year of just kind of, reflecting a little bit on what we've seen, and then also crystal ball gazing a bit into what 2023 could look like. So thank you so much for joining Ulf and I on this episode of Show Me the Crypto.
Guys, yeah, thanks again for having me. Really a good way to start the year. Like these are genuine conversations, and I would leave everyone with this. Just remind yourself that if you listen to this podcast or others, like these people that are out there, spewing price predictions or telling you what projects are most promising, like, make sure you understand where their money's invested first off. Cause like if they fire off a bunch of stuff they have money in, like obviously like I'm not sure if that's a very objective answer. I think most are not smarter than the average person who will end up listening to like a podcast or content. And yeah, I mean, like just kind of trust yourself to like continue to do research. This is a great podcast, of course, to listen to do that. Like you hear from different builders and investors and so on, but you just have to continue to be hungry to learn. And there are a lot of ups and downs in crypto, but like I said, if you stick with it long term, tends to reward you, as long as you aren't Sam Bankman-Fried and lever Ponzi up everybody's stuff and commit fraud over and over again. So anyways, I hope he hears this eventually too, because he's a fraud. So anyways, but yeah, no, happy new year to everyone. And thanks for having me, guys.
Thank you for listening to Show Me the Crypto. Please make sure to subscribe as well as rate and review this podcast.